Look at it on foreign exchange markets. It's going down against all the other fiat currencies, but it's going to go down more against real money. So stop waiting for a pullback. And don't worry, maybe days like today scare people. Oh, gold was down $50, silver was down 75 cents. It doesn't matter. These declines won't even look, like a blip on a chart when you're looking back a few years from now. They're nothing. This is just noise.
I think silver could go, it wouldn't shock me to $100 to $200 ultimately. But I'm focused right now on within the next two. I think gold will do quite well. I think gold could easily double, if not more, between now and the end of the year. Get up to 8,000.
Peter Schiff, the economist who predicted the 2008 financial crisis, is urging investors to view the recent precious metals pullback as a rare opportunity. He calls it a gift horse and warns against waiting for lower prices, arguing that hesitation at current levels of $3,340 for gold and $36 for silver is a strategic mistake. Schiff believes both metals are positioned for substantial gains and emphasizes acting on present market conditions rather than regretting missed opportunities. His bullish outlook is shared by numerous market experts who point to unpredictable U.S. policies, rising inflation, and sustained central bank buying as key drivers supporting continued upward momentum in precious metals. Silver has particularly captured attention after breaking through the $30 ceiling for the first time in a decade, prompting analysts to issue increasingly bullish forecasts through 2025 and beyond. This technical breakthrough suggests the metal's recent performance may only be the beginning of a larger rally. Gold maintains its reputation as a reliable, long-term wealth preservation tool, offering strong return potential with low risk while serving as an excellent portfolio diversification asset. Silver has undergone a remarkable transformation from being dismissed as a boring defensive investment to demonstrating compelling growth returns over the past 5 years that have rivaled equity performance, all while maintaining its safe haven characteristics during global uncertainty. Central to Schiff's thesis is his perspective on currency dynamics. He argues that gold and silver aren't rising in absolute value, but rather reflect the US dollar's declining purchasing power. He points to the dollar's weakness against other fiat currencies as evidence of this trend and warns of further declines against real money like precious metals. This aligns with historical patterns where precious metals serve as hedges against currency debasement. When the dollar weakens, investors typically rotate into hard assets to preserve purchasing power, creating sustained demand pressure. Before we begin, make sure to like, share, and subscribe. 97.4% of viewers haven't subscribed. Join the 2.6% who have by hitting that button and turning on the notification bell.
And we had this pullback in gold and silver today on Friday, a gift horse. I was talking with some of the guys at Schiff Gold, and they're telling me that one of the problems is that our customers are waiting for a pullback. They're afraid to buy a gold at 3,400. Why? It's just going higher. Don't be afraid to buy it. Same thing with silver. How can people not want to buy silver at $36? I mean, that's ridiculously cheap. I mean, yes, you could be upset that you didn't buy it at $25 or you didn't buy it at $30. It's not like I didn't tell you not to buy it, but I'm telling you to buy it at $37 because it's going much higher. And again, it's not that gold and silver prices are necessarily going higher. The dollar is going lower. And look at it. Look at it on foreign exchange markets. It's going down against all the other fiat currencies, but it's going to go down more against real money. So stop waiting for a pullback. And don't worry, maybe days like today scare people. Oh, gold was down $50, silver was down 75 cents. It doesn't matter. These declines won't even look, like a blip on a chart when you're looking back a few years from now. They're nothing. This is just noise. You have short-term traders that are getting in and reacting to the news, to the headlines. Oh, there's a ceasefire, sell gold. Oh, we have a trade deal, sell gold. When that happens, you buy gold, you buy silver. You're being given a gift. Take advantage of it. Don't look it in the mouth. And don't get greedy and hope for a bigger gift. Just take what the market gives you and buy these metals. I think the quick buy in platinum, like that big spike, I still like platinum, but it's not the steal that it was when I was getting you guys to buy it below 1,000. Now that it's popped 40%. But silver, to me, still has a little bit of downside and massive upside. So you should be buying silver, calling up Schiff Gold, and getting yourself some silver. Also, the mining stocks, they pulled back again today, 3 or 4% drop on the decline. But all these stocks, again, even though they're up 45, 50% on the year, something like that, They are ridiculously cheap. People still don't get what's going on. They have no idea how the game has changed, what's going to be happening to the dollar. And so they don't have any idea how profitable these mining companies are going to be. So you want to be loading up on this. And even though the U.S. stock market is at new highs, we're barely ahead on the year. I mean, we're out of the red, but the U.S. market looks like it's going backwards compared to the foreign market. In fact, all the metals had a big down day. Silver was down about 60 cents or 75 cents, excuse me. But it closed at around 35.90. The last time I did a podcast, silver was still below 35, and 35 was major resistance. Well, we had a day between the last podcast and this one where silver was up almost $2, and it blew through 35 and went through 36. In fact, since my last podcast, silver almost traded $37 an ounce. Now, today was a big down day, 75 cents, and we closed the week just below 36. In fact, this is the lowest we've been since breaking out above 35. We closed at 35.90. Gold was also down about $60 today, closed around 32.75. The reason I believe that we had the weakness today in gold and silver, in addition to the fact that we've had a lot of strength in the stock market, and I think that's been a bit of a headwind, and that's why I think gold hasn't already made new highs, is because there's a lot of optimism now as people are moving back into these tech stocks, and so they don't feel as much of a need to have a risk-off hedge position on like gold. They're piling back into these risk assets.
Michael Oliver, a market analyst known for momentum-based technical analysis, is making exceptionally bullish predictions for precious metals. He believes silver could eventually reach $100 to $200 per ounce, with his immediate focus on a sharp surge expected by year-end. For gold, Oliver predicts it could easily double or more before the year closes, potentially reaching $8,000. Oliver's silver outlook reflects broader market sentiment that prices have been artificially suppressed and are due for an imminent breakout. Analysts are setting ambitious targets of $250 or even $500 per ounce, though reaching $100 would likely require extreme conditions such as severe shortages, aggressive rate cuts, or hyperinflation. His longer-term gold forecasts project prices climbing to $5,000 to $8,000 per ounce, driven by global financial shifts and strong central bank demand. Gold has already gained 30% from recent lows, suggesting the upward momentum is building. Oliver believes this trend could eventually push gold to $10,000 or $20,000, where it could establish new long-term anchor levels. Central to Oliver's thesis is his view that fiat currencies distort true value, creating conditions for a global shift towards stable assets like gold and silver. These dramatic predictions follow a familiar pattern where bold price targets often emerge after strong precious metals rallies, typically proclaiming gold will reach $20,000 per ounce. Let's get back to the video.
My personal investments are heavily in silver. Okay. Now, we watch gold because it's the mama monetary metal. But silver, people have forgotten, is a monetary metal. It's been for thousands of years. In fact, in the US, it was a monetary metal. I think this time up in the monetary metals is going to be different than the bull markets that we've seen before. Gold went from $30 to 200 back in 1975. Gold went from 103 in 1976 to 850 by 1980. Or it went from 260 in 2000 to 2011. It got up to 1920. But then it had big bear markets at 50% drops. Okay. Don't expect that this time. I think we're going to probably end up with a sort of crisis globally, not just US, that causes a rethinking of what money is and realizing that fiat money creates distortions. And therefore, let's go back to something that is objectively stable, meaning when gold goes up to wherever it's going, which may be 10,000 or 20,000, I have no idea. It depends on a lot of these other factors in the crisis mode that they put the world in. It's likely to be institutionalized up there. Same with silver. Now, as far as what I think is going to happen right now with silver, we argued a few months ago after we made that spike low in April, which tried to copy the stock market falsely. Got to 27.50 after having been $35 in a matter of about a few weeks. Much of that occurring in 2.5 trading days. We had that was a cleansing drop that anybody who was week long got out.
Shook them out. Yep.
They're gone. Within hours, almost, you were back above 30, 32, 33. Now you had dual highs at 35, October of last year and March of this year, where you dual peaked at 35. We argued that's going to be a triple top breakout in price. But getting back up to the high 34 level told us, one, not only are you going to blow out that high, but we're going to launch an acceleration phase in silver that is likely to see silver trounce gold on a percentage basis. And I think silver likely within the next 2 quarters, or certainly by the end of the year, will see itself in the $60, $70 range, meaning you're going to double the price of silver from where it is now. The old dual highs in silver that existed in 1980 and 2011, either side of $50, those are phantom. I think they'll come out so easily. And that's when the vast public will say, gee, what's going on here?
Mm-hmm.
Well, you should have been in already. But I think the surge that takes that out will be very dramatic and very quick, to where if you're not already in this beast, that'll occur so fast you probably won't participate. It's happened before, and I'm not arguing that when that occurs, that's the end of it at all. I think silver could go, it wouldn't shock me to $100 to $200 ultimately. But I'm focused right now on within the next 2 quarters. Similarly, I think the stock market will expose itself the other way in the next 2 quarters, probably beginning, obviously, next quarter, for example, which is days away. So that's where my focus is. I think the Bloomberg will tailcoat that to some extent, and I think gold will do quite well. I think gold could easily double, if not more, between now and the end of the year. Get up to 8,000. Why do I say that? It's an idiot thing. If you go back and look at the history of gold over the last 50 years, there have been a couple 8-fold moves on a logarithmic scale. If we have an 8-fold, we're going to 8,000.
Gold and silver continue to gain momentum as global financial uncertainty, central bank demand, and a weakening dollar drive investor interest. With gold already up 30% from recent lows and silver showing signs of a breakout, both metals are poised for significant upside. While silver's path to triple-digit prices may require extreme conditions, the long-term trajectory for both assets points higher. Do you think silver will hit $100 before gold reaches $8,000? Let us know in the comments below. If you found this insight helpful, don't forget to like and share. And remember, 97.4% of viewers haven't subscribed. Join the 2.6% who have by clicking that subscribe button. Thanks for watching.